Intros you.
Hey guys, new live stream. First, we're going to talk about what we're doing with our portfolio. Justin, what are you going to do next week and coming up? What are you looking at right now?
Gotcha. So my guess is that probably on Monday, maybe Tuesday, you'll probably see. So I'm very GME focused and a little bit of Bobby focused when it comes to the markets. My guess is that you're going to see GME do. I hope that you see GME do a little bit of a spike on Monday and Tuesday. Same thing with Bobby. If that's the case, I'll be writing covered calls behind a dumpster near a Wendy's, writing covered calls on that. And then probably what I will do as well is I will probably buy some puts as well, some protective puts. My assumption is that towards the end of the month, you're going to see GME drift back down. I think Pi, if I mentioned that Vega neutral was like 70-ish, 80-ish or whatever. So the point is if GME runs up, that's when you write your covered calls. That's when you buy your puts. And then if GME does go back down, the value of your covered calls decreases, meaning if you sold them, you make money, and then the value of your puts should increase. My goal would then be to close out both positions if GME is, let's say, in the 80s, low 80s, high 70s, and use the funds to buy shares. My end goal is I want more shares.
This week, I am looking for chaos. I don't think we'll get it. I actually think we're probably going to see a relief rally a little bit because due to all this dealer hedging, there was just a gross amount of oversold conditions. I pray. I mean, this is what I'm hoping for next week. We saw a massive up day Friday, super green. I hope this week, same thing. We go up maybe 4 or 5 days. The VIX comes back down to like either super low 20s, high teens, and I want to buy back my spy puts that I sold. I would love to get back long volatility. Right now I'm pretty flat, just holding a lot of cash. Like I'm ready to deploy if an opportunity arises itself. Personally, is OPEX this week, Justin? Sorry, I have been extremely busy. We haven't been posting as many videos lately because I've been traveling nonstop these past week and a half. I'll get into it if anyone asks questions, but we're not in the Q&A yet. So still what I'm going to be looking at, I think hopefully that we'll see a little relief rally because I do think we are in the start of a bear market and I want to pick up more puts. So that's what I'm looking at right now. GME wise, I don't know. I know that there's a bunch of stuff going on, but as I said, I've been extraordinarily busy and have not time to dig into the details. Justin could give a lot more information on that as he's been much more hands-on this past week. So Justin, what do you see forecasting out for GME this week?
Well, so when we closed last week, we ran from what, like the low 80s was where we were down last week to, did we ever cry? We did
We were
cross 100 a
like
little bit.
110, I think.
Yeah. Yeah, so and this is not so much me. This is just what PyFi said that strikes me as being credible and hopefully accurate. Is going into Monday of next week, you probably will have some delta hedging by market makers due to the option or due to the interest of options, particularly towards the end of last week as GME ran up. That's probably going to put pressure on the underlying. So again, like I said, if GME is going up, that's a good time if you have shares, enough shares to write covered calls, and you feel comfortable doing so. That might be a good time to do that. And likewise, if you think it's going to come back down, and this gets back into what you're saying about OPEX for May. That might be a good time too, because that way when it goes back down, you're at a way to have more capital. With more capital, you can buy more shares, and not only can you buy more shares, you can buy more shares when the price is down. So it's like a double sale.
I will tell you, last week when we were really getting hammered, I was buying quite a few GME calls just because they were getting sub $3 to the Jan 2023 980s. I was actually sniping them the day before. I was posting them on our new Twitter that we just started, Macro After Dark on Twitter. So you guys should check it out there. We're trying to get pretty active on all these social medias. We'll start to take some clips just to produce content because that is our goal. As I won't say it. Anything else you're looking at, Justin, or should we get into the questions?
No,
You
just
guys
the
better
questions.
ask questions because I'm in this hotel and I have nothing else to do because I'm a loser.
Yeah, well, the first question, Josh, I think is the one that we all need to address. It's the elephant in the room, the thing that's
We'll
stopping
move on.
MOASS from
We'll move
happening.
on.
Oh
We'll
no,
move
no,
on.
no, that's a good one. That's a really good. Josh, I want to know the answer to this
Dude,
too.
I'm sorry, but you'll get insta block now. So let's move on. Let's move on. Okay. Oh, Justin, can you explain what happened with Luna? Like I'm a 5-year-old.
I wish I could explain it to myself. So I think what was going on is you had two crypto pairs. You had Luna and you had UST. UST was always supposed to be equivalent of $1, but like the collateral that stood behind it was that you could always exchange whatever one UST was for however much $1 of Luna would buy for you. What happened, and this is where I start breaking down, but like there was, if it was an attack, it was an attack that very much was like what I think Soros did on the Bank of England when they broke when he broke the broke the Bank of England back in what, the 90s or whatever, where you had a situation where both Bitcoin went down in value, and then I think someone sold off Bitcoin and someone sold off Luna, and so the algorithm tried to stabilize the value of UST by creating more Luna, as what it was exactly supposed to have happen. But if there's not enough, again, as I understand it, there wasn't, they could not mint or they could not print enough Luna at a given time to go faster than the value of which Luna was decreasing, which meant that the peg broke, which meant that UST was no longer exchangeable for $1 or $1 of Luna, but rather was then exchangeable for like 95 cents, 85 cents, and then going down from there. But that's a good,
The
that's
thing
a good
about the
question.
thing about Luna is it's not backed by anything. In fact, it's just an algorithm that makes you say,
Yeah.
well, a lot of these Bitcoiners they're standing up and saying, yeah, well, Bitcoin's hard money. Bitcoin's the same thing. Bitcoin's just an algorithm, and it's not backed by anything but trust. All of these things, everything is just a trust-based fiat money system. Uh, we're gonna have our good friend Luke on pretty soon, and we're gonna have a long conversation about Bitcoin because I'm philosophically the most bullish person possible, but I see a lot of fundamental flaws. We're not going to get into those today. But I would mention that when these Bitcoin maxes are talking about Luna, just of course an algorithm's blowing up. Remember what it is that you are holding. It is an algorithm. I'm not to say that I'm not bullish because I most certainly am, but it is still just an algorithm. I do think all the other like Tethers are going to blow up. We actually just made a video on that because if Tether falls, we think the price of Bitcoin is going to get decimated. So let's get on to the next video. Still bullish on GME? Yes, I've been buying pretty actively. And what I find very interesting is right when we start to see us getting down towards like the below 80s, the buy orders were like 15 to 1 on the day. I mean, people were just hand over fist grabbing as many shares as possible. I know I was. I was actually, I didn't pick up a bunch because I thought we would have more to fall. But of course, the next 2 days we just absolutely rocketed. Any thoughts on Roblox? No, I haven't fundamentally looked at their company. I know kids are crack for Roblox, though. I know a bunch of kids that just go. I'm sure all nighter. I'm sure you're saying that because your kids love Roblox, but I don't know. Justin, do you have any thoughts on Roblox? You definitely don't.
Market question, not my bag.
I haven't even read this yet. Have you guys seen the DD on executive order limiting investing in Chinese companies and disallowing their use as collateral? Thoughts/opinions?
Yeah, so we actually, someone asked that. It might have been you that asked that last week too. So I did some digging around to it, and like I don't know enough to actually go down into the weeds and understand the mechanics of it. But from a very high level, what I find interesting is that when you look at the prior two dates that this thing was supposed to be implemented, it was, I think we had two deferrals from whatever the prior EO was, 13, part of be 13, whatever. And I find it very interesting that in both of those days that were supposed to be implemented, you had GME run. Now, whether or not this was just correlated, or excuse me, whether this was correlated or whether it was just coincidence, that I don't know. But I find, twice as interesting, 3 times, that might suggest there's a pattern there. So very curious to see what's going on with that. Bigger picture, this is what I think you saw happen in the crypto market last week, and perhaps the equities market as a whole. When you have collateral that's impaired, or you can no longer use if you can no longer use an asset for collateral, either the person who's giving you credit has to say, okay, well, listen, you have less that I can potentially attach myself to make myself whole, or you've got to put in more in order to maintain whatever levels you need to maintain. So in that particular situation, I think that anything that would make it harder to use collateral would be annoying for the shorts. That would be my guess. As to exactly taking you through the metrics of how this would go from point A to point B to point C, that I don't know. But very high level, anything that takes collateral out of the system or impairs collateral, I don't think the shorts like.
Rumor is BlackRock/Citadel flooded the market with Luna that they got from borrowed Bitcoin. I would not be surprised. We do think that there is a tie-in to crypto and GME. What is that? I don't know. But there's way too many weird-ass correlations that just don't make sense. They don't pass the sniff test. So what we were just talking about was I think that if crypto shits the bed, let's say Tether's next to go, and then crypto really starts to spiral downwards, like a flash crash type of situation, I think we'll see inverse correlation from GME, and I think that could potentially start the squeeze. But that's just from a Rubleton's point of view, because I couldn't point to the metric where I believe this. It is purely just gut feeling, and you know what? You should never trust my gut feeling, as I fade it every time.
Yeah. The other thing I'll let you do this is like when if something's going to bet, if you invest in Bitcoin or whatever, right? Or let's say you invest in GME or whatever, right? You get that it might go up, you get that it might go down. That's just part of the game. But if you put your money, or if you want to take risk off the table and you go into a money market fund, or you go into like USDT, USDC, or some other stable crypto coin, the reason you're doing that is because you want to take risk off. You want it to be stable. And I find it particularly interesting that whenever the regulators like focus in or start, whining about crypto, it's always this, or not just I should say always. More often than not, it's the stable coins that they kind of talk about the most. So the problem with this one is that like the stablecoins product that I think that they offer is a form of confidence in the sense that, okay, listen, the reason we're in, or the reason when we put value into a stablecoin, the one who puts value into cash, the one who put value into metals, the one who put value into a money market fund or whatever, is because they have confidence that this thing will be a store of value. It's not going to go up. It's not going to go down. It's just going to stay stable. And when something like this blows up, then like it's deeper. It's a deeper problem because people suddenly lose confidence. Again, Bitcoin going up, Bitcoin going down. That's to be GME going up, GME going down. That's to be expected. Your money market fund breaking the buck. Your bank going bust. As stablecoin getting 86. That is not a good look.
It's building fragility to the system, and
Yeah.
as we often say, is the more fragile the system gets, the harder it is for them to maintain short positions. We are matching. This was very much planned. Actually, we said let's get the get up. The only thing Justin missing is his hair. I'm missing the beard though, and so we're but he
You average the two together. So
absolutely perk. Do you think that Ryan Cohn is aware of these cycles and is actively announcing dates to capitalize? Justin, before you say that, it's just too suspicious on his buy-ins. He was buying in on exact FTD days, like pinpoint. Same thing with BBBY. If that is a coincidence, that would it would be so mind blowing that he's not aware. I would be very surprised. Justin,
yeah, I don't think you get to that level without being relatively smart and being able to identify patterns. My suspicion is that Cohen's at least aware of it, or at least he has access to people who can advise him, saying that that's the case. Second thing I noticed this. When it comes to the patterns, you see other firms kind of trading in and around. And so it's not just Cohen's aware of this. I think or I couldn't say everyone. I think more people beyond Cohen are aware of it, even if it's like at our level right now, where we're like, I would say like I would consider us like we get that there's a pattern. We get that the pattern's not necessarily a guaranteed thing to happen, but like it's regular and it's consistent, even if it goes forward or goes
as
back.
Justin was just saying, 2 times, yeah, maybe that's a coincidence, but 3 times, and that's what we're seeing. We're seeing repeated cycles of these dates, and PiFi knows the metrics better than anyone.
Yeah.
If you had to guess in trillions how much liquidity will be pulled out of the system in the next 6 months, how much would you guess? That is a very tough question, as Justin is not a fortune teller. I am, though, and I would be 3.24 million. And you can quote me on that one.
Yeah. So what I'd say on this front is that like when you have a collateral call on the system, so it's Gresham's law playing out. People like demand. Think we just did a video on Tether. In fact, hold on one second. We just did a video on Tether showing how the market cap of Tether was going down in a stair-step pattern from what Josh was like 83 billion and change, stepping down or whatever.
Someone was liquidating their Tether, and that's the main.
Yeah. Yeah, but with liquidate, this is a very, very important key thing. It's not that they were selling the Tether. My suspicion is that there are the whatever Tether calls authorized participants, people who, if they hold enough Tether, can go to Tether Limited and say, hey, listen, Tether Limited, we want to redeem $1 billion of Tethers for $1 billion of cash, U.S. Treasuries, or whatever collateral they have. But what's interesting is if you look at a chart, you'll see this stair-stepping pattern down versus like a curve going up or curve going down. That suggests to me that someone who probably has more resources and more access to knowledge than we have is saying, we want to take a little bit of risk off the table. Go ahead and pony it up. There's another darker interpretation, which is kind of tinfoil hatty, and I don't think this is what's going on, but if Tether was trying to defend their peg, and Josh, didn't the Tether pegs drop to like 90?
Yeah, Tether broke pretty bad. The importance of that is some people don't really well, actually, this isn't answering your question. Your question is how much liquidity is going to be pulled out the system in the next 6 months? I don't know. I personally think that we are in the start of a bear market. Will we have a 6-month rally before then? I don't know. But I do think that there will be a very good time to re-enter put positions, which I plan on doing. This was Tether breaking the peg. Just to kind of explain that briefly. The importance is because Tether's supposed to be backed one-to-one to a stable dollar asset. So if it goes below its peg, there's then essentially an arbitrage play if you think that they actually hold one-to-one assets. Because if it's at, let's say, 96 of the dollar, it wasn't that low, but well, let's just say 96, then you can buy Tether and then liquidate it for $1. That means you're getting $4 profit every single time, which is
For every $100. Yeah.
yeah, for 400 basis points. Every single market maker in the world is going to dive in on that arbitrage if it is purely backed one-to-one, which I think we will come to find out that it is actually not. And if that does happen, a lot more liquidity will be pulled out the system. How much, I don't know, but I do think we will be in a time of liquidity being sucked out, especially if we see the dollar start to spike. If the dollar is pretty high right now, but if it goes to 105, 107, 110, that is going to cause a lot of contractions in the global monetary system. People really needing to get their dollar-denominated debt serviced. And if that happens, servicing debt is deflationary. That would be a lot of dollars being pulled out.
Yeah. And Josh, one other quick thing to add to that too is that in crypto land, imagine how many pairs make up Tether, both on centralized exchanges and decentralized exchanges. And think back to what happened with Luna, or back up, think what happened with the UST. That's a better way to say it. When UST started crashing, prices of assets denominated in UST mooned. Bitcoin finally reached 100,000, but it was 100,000 UST because UST had broke its peg. So the thing is that if people lose confidence in Tether, and that's why I said earlier, you go into a stable coin because you want the confidence of that. You want to reduce your market exposure. And if Tether does go boom, or if people lose confidence in Tether, it's not so much that you take $75 billion, which is a lot. Don't get me wrong, out of the crypto market cap space, but it's 75 billion times the velocity of Tether. How many times does the average Tether turn over for trades, for pairs, or whatever, right? And I'm not saying that something couldn't replace Tether in time, but there will be a massive drop off in volume, and the volume drop off will be, I think, incredibly deflationary for crypto prices. And this is where it gets really weird. Consider back to GME land or whatever, right? Again, I'm not saying this is going on, but let's just tinfoil hat and use our imagination here just for a second. If for whatever odd reason, remember the reason we focus so much on collateral is because collateral is what people need to post in order to keep borrowing, in order to keep their borrowed positions open. And if part of that, think MicroStrategy is a good example of this. If MicroStrategy or a company wants to borrow something and they're pledging a pristine asset like Bitcoin or whatever, right, in order to shore up their balance sheet, they would say, okay, well listen, we've only borrowed, numbers on my backside here, 25% of our assets, and let's say their assets are 100,000 Bitcoin. But the price of Bitcoin suddenly collapses due to people selling off from Tether, or just due to people pulling out and freaking out. Well, that $100,000 in Bitcoin might lose 20% or 80% of its value. So you have an 80% drawdown. You still have the Bitcoin, and in time it'll probably go back up. But if you've pledged that, and if the pledge of that Bitcoin, or the value of that Bitcoin, even though the market's freaking out, even though it's going down, if that falls beneath a certain level, that's a margin call, or something has to be done in that particular situation. That's where I think the tie into Tether comes in. This is where I think the tie into the GME story comes in, because if you're engaged in these exotic swaps or whatever, right, there probably is I would assume there'd be clause or clauses talking about, hey, listen, there has to be bare minimum ratios that are assessed daily, weekly, or whatever. And if it falls bad enough to actually trigger some of these, then you suddenly have this forced rebalancing. I'm not saying it's going to be a margin call, but what I'm saying is that it moves everyone one step closer to the edge. Even if they're not having to jump off the cliff, dealing with Marge's call, they've lost a little bit more space. I mean,
trust.
Again,
and what it comes down to is confidence in the system and trust with your counterparties. Counterparty risk is the single most important thing in the entire financial system. And
nobody's talking about it.
Yeah, no one, because people don't understand how the banking system works. PiFi knows the intertwines of the stock market like no one else. But when if you can look at it from how the banks operate, then it makes a lot more sense, I think, because I think the probability of MOASS is down because he thinks we need the option volume. I personally do too, to exacerbate MOASS, but we don't know what these bilateral or repo agreements are under the surface. And I think that's where the vast majority of these transactions are done, because that is where the vast majority of all transactions are done in the entire globe. And
yeah.
And all of that comes down to counterparty risk. Counterparty risk is the one single asset almost. So thoughts on the Citadel? Wow, what a mustache, man. I don't know if that's fake or not. I think it might be, but I trying to grow mine.
You think?
Thoughts on Citadel, AMC, the AMC tweet, and then hanging out in the ape call. Did you see that, Justin? There was a Twitter call or something, and the Citadel actual account was sitting and listening.
Yeah. So there was a really good DD that was written talking about how what was it? It was saying that if there was a swap between AMC and GME as like swap number one, and then there was a second swap with the first part of the swap being that, and then Berkey I think being the other part. That was a. I wish I'd saved the. It's Sorry, Josh, I'm rambling here. The answer to the question is I think that there's some tie in between that. And the most interesting theory I've seen is that one serves as a hedge for the other. So, in other words, if someone is short GME, they might be long AMC. So, do the meme stocks run and both run up at the same time? Well, the short exposure to GME goes up, but that is netted out or at least ameliorated by the increase of AMC. And then that itself swap might be counterparty to another swap, which was a very interesting idea that I hadn't thought of before too. But this is above my pay grade in terms of.
I honestly don't know what to think of it. I saw a bunch of GME bulls saying that it was them trying to mess with the psychology. There was a bunch of AMC bulls saying that this is the end game. I don't know. I'm honestly I'm not that smart. I have no clue what they were doing, because like what intern is sitting on the Citadel home Twitter account just scrolling through AMC discords like that does that. I just think that's funny. I don't know what it is, but I have absolutely no clue. Reverse split or reverse forward split.
A reverse split would be interesting because that would shrink the float. If you shrink the float, you increase the volatility. If you increase the volatility, you might have the Volgavana squeeze. If you have the Volgavana squeeze, how does it go? That might lead to the gamma ramp, or excuse me, that might lead to people FOMOing into buy options. That in turn leads to delta pressure. The delta pressure, if not managed correctly,
you're making this too complicated. Well, I like that, but I think that you could get the volatility up when you do the reverse split. Then the forward split would be good for the retail option FOMO, and because then more people could buy more options, and I think that's what's better in the long run. There's all this option FUD. That's I'm only like because with leverage, GME is a volatility play. Options is how you get the maximum leverage. Like shares are great, but I love options, because if you can really understand them, you can put on these insane transactions through the option market where you can bet on crazy things and make so much income. I mean, Justin, right now through these covered calls, you're making a killing just through rolling these covered calls, and you didn't know what you're doing before. I'm pretty sure one of the times you fucked up bad, and you said,
I bought the wrong one. It's like, oh, I needed to buy. Oh, oops, I said that the wrong direction.
But then you're of course gonna fuck up, and then you learn, and now Justin's have an incredible wheel strategy that he created on his own. It's great.
Yeah. Oh, Josh, one other thing that I will add to this too, and this gets back into like the Ryan Cohen tweeting and all this stuff, is that so if they do a reverse split, and if that basically is part of the catalyst, one of the catalysts that causes GME to blow up, like when GME is blowing up, it's not happening in a vacuum. And so there's going to be an incredible amount of media pressure. Like expect the attacks to come in, like, oh, these assholes are, crashing the market, or oh, you've destroyed my retirement, or whatever, right? And so the thing is, Cohen can point to his Twitter and said, hey, listen, I'm just tweeting about, shit emojis or whatever, right? Like, look, I don't know what I'm doing, whatever. And in fact, here's what we'll do. We'll even issue more shares. Look, we just changed the corporate charter to issue more shares. Sure, we'll issue more shares. Now, that might have been darn well with the knowledge knowing that doing the reverse split. So let's back up, Josh, scenario. Let's say GME this is just numbers to make my math really simple. Let's say GME drops to $50 or whatever, right? Low point of next week. GameStop comes out and announces, hey, listen, we're doing a reverse split. So for every 2 shares you now have 1 share. So it's like having like 2 $50 bills worth 100, and now you've got 1 bill worth $100, whatever, right? So that shrinks to shares. Now you still have the same amount of value. It's just we're doing an accounting trick to change it. But if that in turn increases the volatility, and that's part of the thing that kicks off MOASS, and if MOASS starts kicking off, then GME can come out and say, hey, listen, we'll be happy to issue more shares. We just keep doing it and doing it and doing it. That might be like part of the way that you can manage the perception. Because again, like I say this before, and like I can't say it enough. Like, do not underestimate the pain that's going to come and the pressure that's going to be brought to bear, not just on GME, and not just against Cohen and the board, but against anyone who holds shares. Like, just brace yourself mentally for this to come through. And so I see this like delicate dance of kind of putting, I don't want to say putting the chess pieces in the right spot, but saying, in the future, if people are looking with knives, torches, and pitchforks for people to skew, I see when I see Cohen's tweets, and others too, but Cohen's a good example of this, a very strategic way of saying like, look, Josh, I'm just tweeting about, this garbage or whatever. Hey, I didn't cause this. So the optics is, I guess, what I'm trying to say. I think they're doing a good job of managing.
Jay, as to your prior question, this one, I know me or Justin don't really have an edge there, so we'll go on to your next one. This is
Yeah.
based on nothing more than my intuition, but my personal probability of a MOASS event happen is between 10 and 20%. I think it is quite good, but realistic. Do you think I'm too high? I'm actually in the exact same boat. I think it's between 10 and 20%. But now, how do you play that? So if there's a 10 and 20% of a MOASS style event happen, which would be a multi-thousand bagger, then how are you going to appropriately position size? I'm putting a lot of money into a probabilistic outcome of a 10 to 20%. Of course, the chances are that it does not happen. That is just the way it works. But if it does happen, you make so much ridiculous money, it is absolutely worth putting a decent position size on. But if you were to say what is the probabilities of these cycles continuing to happen every quarter, I would say that is very high, maybe
Yep.
75 to 80%. And if you can learn the cycles in the meantime and have that long-term position for if a MOASS event does happen, that is where you hit that golden goose sweet spot.
Yeah, and just to put 2 points on that point, what I would say too is that to quote PyFi, one of the things he says is like, listen, this is incredible. Look, they might not be able to close their short position, but they even if they do have to run these volatilities, run the stock up and run it down, they make a ton of money doing that. So don't think they're necessarily hurting. I would disagree slightly and say I do think MOASS is inevitable if nothing changes. And I also think when this kicks off, it's not like you're going to wake up one morning and like MOASS is going on. Like, no, expect everything that could possibly go on to stall it to be thrown at it, and not just from like the bad evil shorts. Imagine the regulators stepping in. Imagine the SEC freezing GME trading. Oh, there's another good example for options. For those who want to trade options or whatever, right? If the SEC freezes GME for 2 weeks, if it's running up, you've got to, like, this is how I think about it. If I'm selling a covered call, I'm not too worried about that. But if I have something that I've bought, it's like, oh, I always need to have more time on this, just in case there's some freeze or some shenanigan that goes on. Just as an example of the various things that might go up. But I do think MOASS is inevitable, just to be clear. But I also think that the
So what are the
amount of
probabilities that if you say inevitable, you're saying 100% right there.
approaching 100%, the limit's reaching 100%. And Josh, this is to your point too. Like in the end, we're all dead. So I mean, like I don't know if I'm really saying anything intelligent here, but I think this is where it gets back to what you said, what PyPy said, and what I try to do is that okay, listen, until it has happened, it hasn't happened, and if it hasn't happened, learn how to make the best of what you can in the interim. Because if it does happen, or as I like to say, when it will eventually happen,
Yeah,
you'll be even better positioned.
yeah, you'll have more shares in the meantime. So, found you guys through PyFi. Thank you very much. Thank you, PyFi. And totally enjoyed you guys' video until we came together. Yeah, I think that was a pretty fun video. Maybe we'll do some more of those story time type videos because we have quite a few now because we spend way too much time together. But too much, that's for sure.
The jokes have stopped, which is appreciative. So
yeah, all they show on CNBC is the Fed funds rate and talk about how they never talk about the $9 trillion balance sheet. How can they ever reduce their mortgage-backed security exposure when they own more than the rest of the entire market? So with regards to the balance sheet, right now we're at the end of a long-term debt cycle. And I'm going to give a long-winded answer to say that we're effed. But at the end of a long-term debt cycle, you have two options. We have so much debt in the system. So we can either go through a Japan-style deflation where we produce more than we consume. And if that's the case, well, we've been living in this time because of Triffin's dilemma and having the world's reserve currency where we can consume way more than we produce. But that would have to end. We'd have to that would mean you can't buy something unless you actually had the money. You can't use your credit card debt to do that. So we can either go through like a prolonged depressionary deleveraging, which would be a deflationary like the 1930s, or a Japan style producing more than you consume. That would have our standard of living dropping. Or we could have an inflationary depression where we have to kind of inflate the debt away. Right now, there's so many cross currents. The real question is, what is going to happen when the next crisis hits? What is the government's response going to be? Is it going to be more stimulus? Is it going to be a central bank digital currency where they can directly implement dollars into the system? If that's the case, then we're probably going to see an inflationary bust. Most of the time, it's so much easier for politicians to inflate the currency and to inflate the debt away than to suck on the pain needle, or whatever the saying goes. So that's why I'm a long-term inflationist for sure, because there's so much debt in the system and we have to service that debt.
What I would say too is this: like, number one, in the context of MOASS, I think there's actually a silver lining for the government to let MOASS happen. I don't think that's they want it to happen, but if it does have to happen, it's not going to be a total loss for them. The second thing I'll say is this: when it comes to no, actually, I'll just leave it at that. Like,
Yeah. Let's go on to the next question.
yeah.
How reliable is the data that we have on GME? Is it completely bogus? No, I would say it's pretty, like, it's accurately inaccurate, because when we see these ETF FTD exposures, when we see them increasing, I would say everything's increasing at that time. But is that to say that's the only metric going on? No, absolutely not.
Yeah.
These metrics that we see when they're going up in our favor, that is helping all along. I would use the example of, if you're on a scale, most scales are different, but you can, if you use the same scale every day, you are going to get a pretty accurately inaccurate test of what your real weight and body weight, what your body fat percentage is. So
Yeah, it's a trend.
look at
The trend line.
and
Yeah.
I think the trends will be accurate.
Yeah. So to just put like a little bit of more context on that, think like Ortex. I don't necessarily think the Ortex data is accurate, but what I do find interesting about Ortex is that it's been at 100. Josh, it's been at 100% for how many, like 50 some odd days now or whatever. That I find interesting. So it's not so much the fact that whatever they say the exact percentage is, or they say like how many shares are outstanding. I'm curious to see about the changes, on that front, because that is like your scale analogy. I think that's the value of the data. So it's almost like you want to look at like a derivative of the data versus the data itself, or you want to look at the rate of change of the data versus what the numbers are actually telling you.
Justin's the real estate guy. What do you think the crash? Do you think the housing crash will be worse in 2008, or will there be a housing crash?
I do, it's looking like that's going to be the case here. So like me, I'm in Houston. I can definitely tell you right now, Q1 and the first part of Q2 is pretty hot, but it is definitely slowing down. Rates are going up. And so what you're seeing right now, at least on the very micro level in the single family world, people are hustling, whether they still have their old mortgage, or like they still have their old pre-qualification letters to get a deal financed, because if they have to go back and redo their pre-qualification, it's probably going to be redone at a higher interest rate. And what keeps real estate prices up is basically people can borrow. Like, for all intents and purposes, that's what it is. And if it becomes harder to borrow, or if it's still easy for people to borrow, but if they're having to pay more to interest servicing, that means they have to borrow less principal. If they borrow less principal, the offers are going to go down. So there's that. Second thing is that if everyone's leveraged up to their tits when it comes to debt, especially when it comes to real estate, and the stuff goes underwater, well, sure, if you're going to live in the house for the next decade or so, okay, whatever, just wait it out. But if you are going to walk, or if you can no longer service the debt, or you lose your job or whatever, or let's say like something happens in the market and you suddenly say, well, shit, it was one thing to pay $2,000 a month and or $3,000 a month on a mortgage. We had $1 million in the market, but now it's been reduced to 200,000. Yeah, we're getting out of here. And even if we have to hand back the keys to the bank, so be it. We need to conserve whatever we can. So
I am right now, the reason we haven't been making so many videos, I'm in a mastermind group with George Gammon, Ken McElroy, and Jason Hartman, where most of these guys are humongous, mega giant real estate guys. And what a lot of them are saying is that there's just not enough supply of houses. If we're looking at the trends, there's so many more people than actual houses. So that could be offsetting some of the mortgage-backed security increases, but overall, I'm very, very bearish on the housing market. Will we see a 2008 situation, or will we see a Japan 1999 situation where asset prices are still down nominally after 40 years? The housing market in Japan has not yet hit new all-time high since 1990. That is over 40 years. What would happen to our upper middle class if asset prices did not come back? If asset prices tank by 75% and do not come back to a real or nominal terms in 40 years, that is just absolutely out of this world. So it is something that I'm looking at for sure.
let's see.
What is the first thing you're going to buy after MOASS? Stocks. There's going to be so many opportunities, like commodities. I'll definitely have a big position in gold. I would love to I'd probably put 10-15% of my portfolio into physical metals, and then probably what Justin does where you can borrow against them. But there's a lot of commodities. I love uranium and shipping right now. Depending on what MOASS gets to, I would like to get a very diverse portfolio of super high dividend paying stocks that I could then hopefully live off.
Yeah, and like what I'd say too is like I think the first thing I would go through is I would reallocate cash directly into precious metals. The problem with precious metals is these are probably going to be the first thing to break, or the first thing where dealers are going to run out of. The supply chain will crumble. This is what you saw in 2020, and you've seen it before too. So for myself, I would probably rotate into a very decent cash position. I've got a few bank accounts open. I would probably fund it up to the max of FDIC and CUA insurance, and then I would probably start rotating into commodities is probably the big thing. There's some more like medium term companies that I just happen to like that I've done business with a long time, and I'm assuming I'm in the position to take a material stake in them. I probably would go into them. Like Hyatt's a good example of this. I'm very pleased with the product. If I was in a position to actually buy out enough of Hyatt, to be like just what's the fancy way, like material shareholder or like what's Cohen, right? Like the point is when you own enough of a company to basically be considered an insider, there are some companies that I would probably start taking, large stakes in just because I've done business with them a long time and I like their products.
Yeah, Justin's going after companies and gig yachts, while the rest of us rubes are just struggling for paychecks. All right, John. Hey, you girls. Do you know what a reverse split would shrink Diamond Hand shares and increase the GME stock price? Right? Yes,
Yeah,
that's what we were just talking about.
yeah.
We were just saying that they would do that to increase volatility, because if there's less shares available in the float, then that is going to mean that the volume's less, increasing volatility drastically. So what people like PiFi are saying, potentially they do a reverse split, which decreases the amount of shares and then increases volatility. Then they do the forward split. So yeah, it's just kind of a new theory that's coming up.
Oh, as far as this one, yeah, Thursday was a good day for me. Friday was an even better day, and I think that maybe Monday and Tuesday might even be able to eclipse end of last week. So
I don't know.
Elon having buyer's remorse, maybe, but again, like when you're operating at that level, like
He doesn't
nothing is
care
as
about
it
the money.
seems.
Yeah.
Yeah.
Personally, I feel like there's a lot of indicators lately. High volatility, halt, crypto crashing, 100% utilization. Feels like over 1 to 3 months, we're in a high probability window for MOASS. I completely agree. I think we are in a very high probability for MOASS over the next 3 months. We are definitely keeping our eyes on the same thing. And Justin, you're slowing down your covered call writing as well, correct?
Oh yeah, like the last, or like definitely for we have a bit of a Gex run on Monday, Tuesday. I'll do that. But my assumption is that like if Jamie's going to be crashing back down at the end of the month, to take it back down and then be really, really conservative. Because remember, when the stock's down, when it's cheap, you either buy stock or you either buy shares or you buy calls. That being said, I probably would favor I probably favor the stock over the calls. Maybe like 65-35 or 65% of the capital I make, I'd probably put back into shares. 35%, I'd probably go for calls. Maybe about a quarter out or so, mainly because I don't want to get caught with my pants down if there's a freeze and the options are expired or the options can't settle even if they would otherwise be in the money. That's probably that. Josh, there's a good example of one of these things that can come out of left field that you really have to kind of think through and be able to manage.
No, I do not have faith in the markets. Justin has had an extreme unfaith. Like Justin won't buy
Yeah.
any stocks because he has no faith. For me, stocks are either going to go up or down or sideways. So you can still create a portfolio even if you don't have faith in the markets, especially if you. I think GME is a way to put that bet in the market that there is a potentially a corrupt system, which we all know there is. I am actually. I think this is very probable, Hyder. And
Yeah, that's how it works. That's how it works.
and you know what? My hair will probably get chopped off while I'm sleeping as well. So all the catalysts will be aligned for MOASS to happen. And Hyder, if there is any way to reach you, buddy, let me know. Because if I have to fly down to Alaska to let you know that you got to sell, I will. I really will. Hyatt or Keynes? Come on, dude. Hyatt. Hyatt. I love. What was his book again? Oh, The Road to Serfdom. Road to Serfdom was incredible. I do like reading Keynes as well, though, because he was extremely, extremely intelligent in learning how the enemy thinks.
Yeah, and in defense of Keynes, like if if Keynes saw like what is now associated with his name, like he would be like so there's like what we think of Keynes today and like what the guy actually thought in the past, and so I think there's a bit of a discrepancy between those two.
Changed his opinion as new facts arose. He was actually a very extraordinarily smart guy and a great investor. Actually, I read a book about his investing. Yeah. I like them both. Keynes, I mean, I don't agree with a lot of what he has to say, and the way that people perceive Keynes today is completely off. But
yeah,
I do love Hayek. True or false? Crypto dumps, super high frequency traders crashing up for MOASS, and or short position obligations markets wide, including GME. I will put it somewhere in the middle because I don't know if there is a tie into crypto. I hope so, and I personally believe so. But if I have a strong gut feeling of something, I would run the other way, and I would probably go long crypto and short GME if I was you guys, because that's probably what's going to perform the best.
I would say, put me down. If I have to guess one or the other, I would guess a true. I would guess a true
Now
to
we're
that
now
one.
we're in alignment, Justin. There's no way.
Yeah.
So, geez.
Yeah.
Thoughts on the bid spread during the recent halts? I haven't been
I,
looking too closely, Justin. Yeah, you were much more active.
yeah. So that's more of a market technical question. What I find interesting is that the level that when it increases or whatever, right? That I would say this. I find it interesting. Like I find many things with GME to be interesting. I mean, like if you trade options around BBBY or whatever, right? Like the bid spread is what, maybe like 4 or 5 cents. It's nothing. GME you can get to a few bucks. Especially if things are going haywire or other things are going hectic. So the way I read it is that it just shows to me that like both that everyone is having a hard time pricing this. In other words, the people who are selling it are demanding much more, and the people who are willing to buy are willing to pay a lot less. And so when you have this divergence between buyers and sellers, that I find that to be very, very interesting because it suggests to me that the the logic that people are using in reaching their pricing decisions or whatever, it's starting to diverge. Where you have people who feel very strongly, as indicated by the diverging spread, that well, back up. I find it interesting. That's probably a good way. Josh, would you get a mohawk for MOASS?
Yes, right now I'm trying to look for the theta for that guy. Can you pull up that question?
The theta. Which one?
You fucker. Oh, sorry guys. Sorry. I hate these long pauses. So shit.
This one. There's one you want, Josh. How much theta you like?
I like a super low theta because you want as little time to get as absolutely humanly possible. So I go super low theta, but basically I want to go as far out as possible. Oh, not as far out as possible, but I like to go very very far out for my holding position. If I'm let's say if there's a bunch of obligations due, I might buy some like maybe a monthly, a few weeklies or something like that, where those will usually just be at the money. But my main position, I like to go out far and go super out of the money because that is what I want to capture a MOASS style event. I would, you know what? Yes, I'll get a Mohawk for MOASS, but I'm not gonna like. I'm sure I could do a Mohawk now if I really needed to. That's brutal. But yep, I'll do a Mohawk. Screw it. No shaving the head though. No shaving the head. Super high frequency. Shorting head funds, not high frequency. Oh, shorting head funds. Thank you. I had absolutely no, I was just assuming that it was high frequency trade, high frequency firms. So it's shorting head funds. Wow. Justin,
Yeah.
did you know that? And you didn't correct me? I've said that probably 20 videos now. Okay, well, we move on. I don't know if Justin's here.
Yeah.
Oh, yeah, Peter, I'll make sure to give you text. If you can take text, I'll send him over for sure. Thoughts on the Vinco squeeze potential dividend? I don't even know what that is. Justin, do you?
No, Pi Fi. That's a Pi Fi question. I'm sorry, Chris. Like I just GME and to an extent BBY is all that I follow when it comes to the market.
I follow mainly commodities. If you guys have any questions on that, if you had to buy GME or crypto and not touch it for a year, GME for sure.
GME.
If I could go short something for a year, I'd go short crypto for a year.
Yeah, and the reason is like here's sort of a good example of this. Consider what's going to happen, with the unknown. So over the next year, if GM actually announces their NFT marketplace, they spin off, some, tokenized dividend or whatever, right? It's like an airdrop, for all the crypto bros out there.
Actually,
So,
that'd be tough though. If you had to hold it for a year, Justin, let's say GME squeezes in July. I mean, that thing's coming right back down by the end of the year. It's gonna be a wonky year for sure, though. I don't know. That's
yeah,
a tough question.
but
I would hope that I don't have to hold it for the whole year.
yeah, but like I would rather in this weird scenario, like I couldn't do anything with it. I'd rather hold GME. Thank you, Josh. I'd rather hold GME for Justin. Are you Moon when?
Can they? Oh wait. Oh.
Oh, I would say so. I don't know. Like the only way I can answer that is basically by asking another question or by making another like ambiguous statement. GME will moon, or MOASS will happen in the way that people traditionally think of MOASS, when people who are short can no longer expand their balance sheets, or the true obligation that they have taken on is accurately reflected on their balance sheet. When a combination of those two things happen, you're going to see sparks fly. Now, as to how that's going to occur, when that's going to occur, that I don't know. But I will also make one other comment too. What's going to kick this off, it's going to be something stupid. Like Tuesday or Wednesday of last week, PyFi was streaming, was talking about look, don't you guys realize they have all of these mechanisms to cheat, from CNIS to all these other things? And the answer is yes, this is absolutely true. They do have all of these very sophisticated systems in order to manage, their position and basically screw over retail. But think back to, again, not to be a broken record here, but think back to 1998 with LTCM and how LTCM blew up. These were the smartest guys in the room. A lot of the option models, like Scholes, I don't know Black did, but Scholes worked for LTCM when it was blowing up. He was one of the people that helped them make their models. The reason I mention this is that these things work great until they don't. And the reason that would cause them to not work great is that if there's some assumption they've made that suddenly proves to be invalidated. In the LTCM case, it was that no country would default on its own sovereign debt. Russia did that in 98, which is what blew up LTCM. It violated one of their core assumptions. There's going to be something similar that's going to happen to the assumptions that the current processes, CNIS, et cetera, whatever, right, that our system right now is based on. And whenever those assumptions are violated or proven to be wrong, I don't want to say that's going to be the catalyst, but that's going to be a major, major component right there to kick this party off.
If there's a MOASS event, do you think they'll let it run, or they will try and sell it for a fixed price for everyone? I don't know. After seeing the nickel squeeze where they fix the price, they absolutely could say, oh, GME's at $900. Everyone, you're done. What happens to the shorts in that situation though? They don't close because they still have the short position on their book. So they settle that, and then what happens? It's a very tricky situation. If they could do that though, and the system's so corrupt, I would not put that past them.
So here's PyFi, I think, accurately talks about, hey, listen, the government's not going to let the financial system, melt down to a point. My response to that is, I don't necessarily think PyFi is wrong, but I do think there is an argument that can be made that is within the realm of reasonable possibility that there's a silver lining for letting MOASS happen. Think of it like this. Sure, the regulators, politicians, etc., they might love to do the biddings of the citadels and the other, deeply entrenched, players in the system. But they also know if the majority of America is pissed off and literally walking down the streets with torches and pitchforks or whatever, right? It doesn't matter how many dump trucks of $100 bills, Chase is going to drive up to, the senators or the congressmen's or the regulator or Gensler's home. It just isn't going to matter. There's going to be no amount of money that can overcome the public angst. And in that particular situation, so if the public gets enraged enough, right, that's going to be
after that already happens though. If they say, oh, you guys are screwed, then if there's some outrage, I don't know what's going to happen. And no one knows. That's the black swan event. What is the government's response going to be? No one knows what will happen. And we're just trying to game theory it right now, Justin.
Yeah, and one other thing too, it's almost in a way good that they did that fuck over halt last year, when they stopped it. Because here's the thing, right? If they do that again, everybody knew it. Josh, you knew it. I knew it. They knew it. Everybody knew what they were doing back then last year. And if they do that again, see, here's the thing. I don't think they've got a good option for turning off the buy button. Because if they do turn off the buy button again, it's just going to be wait a minute, this already happened before. We had congressional hearings. What the hell? But if they don't turn off the buy button and keep squeezing out, there's going to be well, regulators, what the hell is going on here? So it's a very interesting situation we have in right now. And this is why I say, too, this is going to go beyond the world of economics. This is going to go beyond the world of macroeconomics. This touches geopolitics and beyond. So when you bring in all this stuff, it becomes very murky very quick, But the takeaway is that I think there is an argument where the squeeze happening, like a MOASS happening, would actually benefit the government.
Of course there's a situation, but there's also a situation where they don't let it happen. So who knows? Yeah. I would love to answer this. Can you explain your theory why gold and silver are stable while the US dollar is at all-time highs for inflation? So let's start with the gold and silver. It's all psychology. I mean, even if you look at a chart of the gold priced back in the Weimar Germany hyperinflation, inflation was run at 15, 16% in Weimar Germany, but gold was flat. And then it would trickle up, it would go down, and then eventually it just absolutely skyrocketed. It is the psychology of these investors and what they're pricing the risks are. Sometimes they'd rather hold stocks. I am very bullish. And just like any market, when something is unloved, it has my attention. So gold and silver, they are very, very unloved right now. A lot of people are saying crypto is the new gold. When that comes out, that is probably not the case. People will still want gold. Gold is insurance, and when we need insurance, people will buy it. We saw this in March of 2020 or August of 2020 when gold was skyrocketing because people were buying insurance. As for the dollar, you need to look at one of our old videos on the dollar milkshake theory. There's so much dollar denominated debt outside the system that people have an unlimited bid for dollars no matter what. You say that U.S. inflation is high, but what about in the 10 years at like 3%? So who would ever buy a U.S. bond? Well, if you're Japan, they're still cutting rates right now. Inflation's running even hotter. Would you rather hold a yen? Would you rather hold a euro who still has rates at zero? They're just now starting to talk about raising rates to maybe 1%. No, that their 10-year still at 0%. Would you rather hold a Canadian dollar, a Australian dollar, any currency? If you name it, the U.S. is the cleanest dirty shirt. Maybe you could argue the ruble, but there's so much counterparty risk there. So at the end of the day, there's so much dollar denominated debt. While the dollar is the cleanest dirty shirt, that's not to say it's clean. That's not to say we want to hold dollars, but all other countries, they want dollars. And you know what? They need dollars. So I'm very dollar bullish.
Yeah. So anyways, Justin, let me give you the concise answer right there. Josh. Instead of the DTCC, think COMEX. Instead of Citadel, think JP Morgan Chase and draw your own conclusions.
I'm not a huge buyer of the gold and silver being manipulated. There's a lot of geopolitical risks there, but it's
the geopolitical risk is why it's being manipulated, I would argue.
Well, no, there's absolutely a situation. There's like I'm not disregarding that, but I would not put that is the only reason. So can shorts avoid share divvy by going cash instead?
That's more of a technical question. I was listening to Pi-Fi streams earlier today, and I don't think that it's not immediately apparent to me that they could do that. I think they actually have to deliver shares, presuming they have to go into the market and buy shares. Now they're trading cash to buy shares. I guess, well, they're kind of using cash, but the limiting factor on that is that they're having to trade cash for shares versus just saying, here's cash in lieu of a dividend. So, good question, I know.
So for playing the GME cycles, why do you prefer out of the money? I'm new to our options and curious for reasoning. For my main position, for my super long dated calls, I like super far out of the money. For the cycles, I like out of the money, but closer to at the money, just because the leverage. And GME is so effing volatile that when it runs, I mean, implied volatility spikes so much. If you've held options at any time when GME starts to spike, I mean, your options are going to be up hundreds of percents. I mean, implied volatility spikes like you've never seen on a stock before. And because of that, your options increase in value so much, even if they're out of the money. I mean, if you're pretty active and you can sell, you're going to be walking away with massive premiums for much lower costs. But I'm for the cycles, I go much closer to at the money because kind of like you're probably alluding to, it's not going to run as much as a MOASS style event. So do you want to go to the next question, Justin? Or
that's pretty much the the thing of that.
So, if you buy a synthetic GME share on Immutable X, a NFT marketplace upon the Ethereum blockchain, wouldn't this help get some of the shorts out of their over leveraged position?
Sure, but only if you could then turn around and somehow redeem, the tokenized version of GME for the real thing. Now, my assumption is that you can't do that. But if you could do that, see, here's the thing, right? If you still have to pull this out, like how many shares actually exist? Because again, let's just say the numbers on my backside. Let's say there's 100,000 shares, that have been tokenized that are available for redemption. And assuming there's no shenanigans, there's no overselling going on the crypto blockchain, then I would say, yeah, you can. But again, it's not going to be synthetic like an ETF would be synthetic, because I would assume that there's no way for Immutable X to engage in, would this be bona fide? No, would it be bona fide market making? I don't think that Immutable X can generate an IOU share like an ETF could do from a basket redemption. Now, if you're going to say, hey, listen, whoever we're short, we have this contract over here to bring over, 300,000 shares from crypto land of GME, then if that can count as collateral, then you can kind of double count through like a shenanigan. But this is why Josh and I are so fond of saying, what's going to stop this party is when the collateral or when balance sheets can no longer expand or the accurate liabilities that people have accrued on the or off balance sheet are brought on balance sheet. I feel like I'm saying this in a very weird way. Josh, do you want to?
I wasn't listening. I was eating.
That was the mac and cheese.
I've been so busy. I just every chance I get, I need to eat, and then I'm so excited to go to bed. We'll be back at our normal schedule tomorrow, actually Monday, because I'll be back in the home office. So nickel's a different scenario. It's a commodity. There's a finite amount. Yes, but they can do that with anything. If they can do it with the nickel market, they can do it with the stock market as well. I hope they can't, but you can't put that against them because at the end of the day, we're dealing with corrupt agencies. There are incentives for both ways, but we don't need to debate this. We don't know what's going to happen. There's an incentive that they let it run. There's an incentive that they don't. Who knows? Who knows? Dr. T tweeted this weekend that implied that the share recall for stock dividend must occur for the dividend to be issued properly. Hi-Fi disagrees. Thoughts?
So I want to say that Trimbath made the argument that that's market mechanics. I wish I could get it's a good question. I wish I could give you a good answer. I guess from this, not getting into the weeds, I would assume that anything that gives the shorts heartache or heartburn or whatever, or makes it harder for them, is inherently bullish for GME. Now, whether that's enough to actually force a recall, that I don't know. But again, I can't say that them causing them problems, that doesn't necessarily bring a tear to my eye. Let's see.
I was shooting for the first time. All-nighter's a big shooter. So I was asking him for some tips, and we ended up just going to the range. I was shooting pistols, not too good. The only people who got to shoot sorry, I was just chewing. The ARs were the top 3 shooters in each group, and I was not one of them. I was with a bunch of badass cowboys, and they were good shooters. I mean, I had, I think, 1 or 2 bullseyes. Like these guys, every single shot, like the winners in each group, they hit like 4 or 5 bullseyes in a row. All nighter, you would have had a ball.
Let's see. What happens to options when the dividend is given? So this is a question of what actually happens to the shares outstanding. If let's say you double the shares outstanding, then you would double the amount of options you have, but you would also have the strike price. So if you're sitting on 100 calls for 250, you would have 200 calls for 250. If it goes the other direction, so let's say they do like a 2-to-1 split, if you have 100 calls for $100, you would have 50 calls for $50. So that's because all that you're doing is you're just changing the outstanding shares. Now, if a dividend is issued, so let's say there's some crypto dividend that's issued. No, because when you hold an option, you just have the option to buy the stock, and actually owning the stock is what would otherwise entitle you to the dividend of the stock. So it's if they change the accounting of the stock, like the shares outstanding, the options will adjust up and adjust down. But if it's actually like something that's being issued, then the answer is no, unless you otherwise redeem your option and take delivery of the underlying on or before whatever the what is the effective date of the dividend is going to be.
Mm-hmm. Yes, you will see us at Rebel Capitalist Live next month. You guys should all go. And if you move south, make sure you just say, it will be very easy to recognize Justin. He's 5'2", and you just look for a little miglet walking around.
Manlet, you asshole. No, I am not 5'2". And actually, I'll be at a Rick Rules thing too in Boca Raton at the end of July. So heads up on that one too.
Josh is like, I ordered room service and my food's getting cold. Yeah, dude, I did. That's exactly what happened, and it is getting cold. So I have to eat it just to make you guys hungry and suffer through my atrocious eating habits. If anyone else is going to Rebel Capitalist Live, you will see me in the check-in desk most likely as I work with Mr. Gammon. So ask
Josh what he's eating. Josh, is it Lucky Charms tonight or is it Fruit Loops?
Justin hates. I'm one of my. So I have. It's not healthy. It's not healthy. I was eating. And then, shockingly, room service is not too good. So I had mac and cheese with a chicken sandwich with happen to be fried chicken. So it's not healthy stuff, and it's not going to sit well with me. But you know what? It's okay.
Do you think that Boss Blunt is saying correct? Biden's EO next month will nullify Chinese bonds, will cause any possible MOASS. So we kind of talked about a little bit this earlier. So that's a technical question, getting into the weeds, keeping it very high level. Anything that makes it harder for them to expand their balance sheet, or anything that would otherwise compromise what they've used to expand their balance sheet, like an impairment of collateral, I see as being inherently as a headwind for those who are short. So at a very high level, if you pull collateral out of the system, you don't replace it with anything. My assumption is that makes it more untenable for the shorts to maintain their short position, or at least go further short. Will that be enough to actually trigger MOASS? That I don't know, but again, as I'm fond of saying, I think that's a step in the right direction. So,
Yes, yes, yes. Have you bought your positions yet for the alleged
oh
cycle in August yet? No, I have
yeah,
not. I think we're gonna get crushed. Well, I do have some short term calls, but I pray and I'm very bearish on the market, so I think Jamie's probably gonna get crushed until something breaks. But as I'm averaging down, while we're tanking like hard, I'm picking up slowly like 2, 3, 4 long dated GME calls at a time, and I if we get down to like the 70s 60s range, I think that's very possible. I have so much cash sitting and ready to deploy right now. I'm going to be going very, very heavy.
yeah. And in my case, what I'm planning on doing is that if we have a small run Monday, Tuesday of next week, selling covered calls, using the premiums to buy puts, and then writing it back down, cashing or closing out the positions, and then buying shares at the bottom. That's kind of my own play. So the answer is no, I haven't yet entered the position, but I would expect to do so Monday, Tuesday, maybe Wednesday of this coming week.
Geez, you're taking your sunshine. I know he's young too, so I'm sure he's getting a good experience. He's probably a better shot than me. I was a rookie. Will we be streaming the shareholder meeting? I think Hi-Fi will probably stream it, and I'd be more interested in what his take is than
Oh yeah, like it's us you want to pay attention to, not
yeah,
us.
yeah. So, but we'll probably do a video on it if it's interesting. I mean, we'll probably be freaking out with Pi-Fi. Hopefully, he takes
Yeah.
gets the shoulders in
Yeah,
there.
it's shoulders. Yeah, maybe we see the calves. We see the calves. Puts on the red roof in. No, I'm more of a
No, I
like
think
it's about.
he has puts on them. So, I mean,
Oh,
that's probably a wise decision, honestly. I mean, they're probably a garbage company with a horrible balance sheet. Like most, I'm just bearish on everything that's not extreme value. So,
yeah,
like,
and I would say,
I'm tough.
yeah, and I would say I'm more of a Hyatt guy. When I'm not at Hyatt, I try to stay at an Amman. When I'm fortunate enough to wander over to
He's never
them.
stayed.
So
He likes to talk about Amans.
I do. One of these days, when Jamie moons.
Oh,
So
it looks like the questions have run out, and when that happens, we are forced to end the live stream as there's nothing else to talk about. Oh wait, actually, since this is usually me and Justin will spend too much time talking anyway. We'll get out the cookie dough and we'll talk about our days. So I was at Mark Moss's event. I mean, I think
yeah,
you guys, I thought that was a fantastic event. I would highly recommend something that just for networking. And I've really, really been fortunate enough to network and I have a massive
yep,
amount of resources because of that. But buying the more expensive tickets at these events are actually really important. Mark Moss has a I like Mark. I don't think he likes me too much. Well, actually, no, I think he does. He's followed me on Twitter, so he probably doesn't even know who I am. But his green room that he had was fantastic. I mean, because all the speakers were back there, and like all the super successful people that were part of his mastermind group and the people who were buying those tickets. I mean, I think I'm going to be doing business with a few of them. It's just it's showing some real value in the networking that he has at his event. I'm assuming that's where me and Justin met, whereas at George's event. So these networking events and these like these live meetups are just fantastic, where you meet some super interesting people. That's where I
yeah,
met All Nighter as well. Twitter handles, Justin, can you throw a macro after dark one in there really quickly?
yeah. Give me a second. So
Yeah,
here
just put a macro
is
after dark one. We both have private Twitters as well, but if you just we only follow like I think like 30 people, or we have like 30 followers on our macro after dark Twitter. So I mean, it's pretty easy. I'm Josh. He's Jay Edward, as he likes to go incognito mode. Will we see more swag at Rebel Capital Slack? You know what? Yes, probably not from Justin, because I like to make fun of his outfits, but I will have some quote unquote swag. Hopefully, I do like to dress up. Which cryptos? Probably just Justin's a hard XRP fella. I like Bitcoin. I'll probably get some XRP just because of how adamant Justin is, and he's the one who got me into GME. So I feel like I'd owe it to the XRP crowd.
Yeah. Let's see. How would you gents? Oh,
You fellas, make sure you check us out on Twitter. Shameless plug as we get zero commissions. Yeah, surprisingly, YouTube is just a drain wash for money. I mean, we just hired our third person, and we're hurting in the banks. But you know what? It's great and it's fun.
yeah. Okie dokie. Josh, we've got one more question. Then that's
Yeah, last one.
how would you deploy 10,000?
I would try
Josh,
to start an online business, honestly, because in the markets, you're not going to do anything with it. It's in today's environment, if your goal is to grow that to, let's say, $100,000 in the markets, you would have to hit a home run, and a home run like
yeah.
GME probably. But I wouldn't even recommend that. Maybe throw like $1,000 into GME or something. What I would do is I would try and use that money and try and start an online business. So what me and Justin are doing right now, we are draining our pockets now, hiring these editors and going broke in the process. Well, I am. Justin, he sucks as he he's a real estate guy, but
Real estate guys typically aren't hurting for cap,
no,
at least in the good times. When the bad times come, it's the exact
yeah.
opposite. But
So what we're trying to do right now is maybe start some businesses around the channel in the future, get some good ideas, but we want to provide some value. So we're looking down, I don't know, 1, 2, 3 years where we would like to monetize viewership and eventually, and that's kind of our plan. So if you could maybe start an online business in the stock market right now, it is tough because we're definitely not living in the March 2020 era anymore where there was so much easy money and buying stocks was a no-brainer back in the day.
and I can also say this too. The one thing I absolutely would not do, unless you wanted to do some very like technical thing, is like I would not spend that money on higher education. Like it's just no longer the deal it used to be. So
Well, actually, higher education, I'm not talking about school, but there's so many platforms where you can learn about buying different programs have taught me so much. I mean, I've spent probably around $10,000 on different live membership groups and different things that you learn from, and I've learned a ridiculous amount because of them. Thanks, All Nighter. Hit the like to help these boys out. Thank you guys, and we'll see you on the next one. Thanks for everyone that was hanging with us tonight. You're probably lonely just like us. See ya.
Josh, thank you.